Good evening.
Welcome to all. We have just started recording the session and we will formally start. We have our keynote speaker and all the speakers except for one speaker, Mr. Gangesh, who will be joining very, very soon. So a very good afternoon and namaskar to all of you. It gives me immense pleasure and honor to extend a warm welcome to you all to this seminal webinar on investor protection framework in India, challenges and road ahead. This is organized by NCAER in collaboration with IEPFA, the Investor Education and Protection Fund Authority under the Ministry of Corporate Affairs, Government of India. Today, we will deliberate upon the challenges we face in investor protection and the strategies to navigate the road ahead. India's economic transformation is a narrative of resilience, innovation, and growth. However, it also presents us with a complex web of challenges, you are all aware, from the need to bridge the knowledge gap that often leaves investors vulnerable, to the imperative of staying ahead of evolving financial frauds and malpractices. We must ensure that aspirations of our people are met with a secure and the aspirations of people are also a well-informed one with an investment environment congenial to the people who are entering into the investment field in various ways, not only domestic but also foreign. This seminar provides us with a platform to address these challenges head-on, and we emerge with a clearer understanding of our responsibility. For today's webinar, which is the first in the series this year, we are joined by a constellation of luminaries who have been working towards enriching the financial landscape, are from diverse fields: government, regulators, technology and digital governance sector, personal finance, and investment area. Their insights will undoubtedly guide our discussions towards a more secure and financially educated investor community. I welcome our keynote speaker, Madam Anita Shah Akela, the CEO of IEPFA, and the speaker, Sri R.K. Nair, a former member IRDA and also former ED at SEBI. Mr. Dhirendra Kumar, founder, Value Research, Mr. Gangesh Verma, digital technology expert, who will join very soon, and Mr. Neeraj Nigam, the executive director of Reserve Bank of India. You are aware that IEPFA and all financial sector regulators, RBI, SEBI, IRDA, PFRDA, stock exchanges, and other financial sector intermediaries have also been actively engaged in promoting investor education and protection. IEPFA, under the leadership of Sri Manoj Govil, our Secretary, Ministry of Corporate Affairs, Madam Akela, CEO, have been taking a lot of initiatives in this field to boost investor protection and to reclaim unclaimed shares and unpaid dividends. An integrated IT portal has also been announced in the recent budget by our Honorable Finance Minister. I take this opportunity to congratulate all of their efforts taken in this direction and hope the takeaway from this webinar will be very valuable for furthering the cause. I myself have closely worked with regulators, intermediaries, and government ministries and departments on financial sector development consistently for a decade and a half in the Ministry of Finance. I have always felt that investor protection is at the heart of sound financial sector development and is the underlying theme of any financial reforms and institution building. I must convey the best wishes of the Director General of our institution, NCAER, for the success of this endeavor. Thank you all once again for your presence and dedication to this vital cause. Let us embark on this journey of exploration and enlightenment together. Now, I would like to request Madam CEO Anita Shah Akela to deliver the keynote address. But before that, may I introduce our keynote speaker. Madam Anita Shah Akela is a Joint Secretary in Ministry of Corporate Affairs and the CEO of IEPFA, as I mentioned, as also ex-officio member in the governing board of the IBBI. She has held several important positions, including as DG in the CAG office, Internal Financial Advisor in the Department of Atomic Energy, Internal Financial Advisor and Member Secretary, Nuclear Recycle Board in the Bhabha Atomic Research Center, Mumbai, India's finance representative in the Square Kilometer Area Project, a chief accounts officer in the Tirumala Tirupati Devasthanam Board. Madam has also been the auditor for UNICEF. She holds a master's degree in business administration with specialization in finance from IEPFA University and is a certified internal auditor from the Institute of Internal Auditors, Florida. She holds a Bachelor of Science degree and is a gold medalist. We welcome you, ma'am, to share your thoughts and enlighten us. Thank you very much. Ma'am Akela.
Thank you so much for the glowing introduction, Mohapatra ji. Esteemed speakers and dear participants, a very good evening. In this Amrit Kal, I'm really delighted to be here in this Investor Awareness and Protection webinar. This is a collaborative effort between the Investor Education Fund Protection Fund Authority, that is the IEPFA, and the NCAER, that is the National Council of Applied Economic Research. It's wonderful to have participants from a wide spectrum of society, government, academia, and various institutions which have joined us today. Thank you for being here at this significant event, which is focused on boosting investor awareness and safeguarding their interest. In today's ever-changing world, understanding how to protect yourself as an investor is incredibly important. Our aim today is to share valuable insights that will help investors confidently navigate the complex finance world and processes to maximize their financial well-being. It is my privilege indeed to address such a topic of paramount importance in today's rapidly evolving financial landscape. The challenges for investor education, protection, and the road ahead, which in this dynamic scenario appears to be a little complex. In an era where the financial marketplace is marked by so many innovations and complexities, that the significance of making an informed decision and safeguarding the investor's interest cannot be overstated. Ideally, a financially educated person should make better decisions for their families, increasing their economic security and well-being. Secure families are better able to contribute to vital and thriving communities, further fostering community economic development. So the grain starts from financial literacy of one individual and spreads to the entire society. Drop a rock into a lake or a pond, the ripples extend outwards with wider and wider effects. So it is with financial education. A well-informed, well-educated consumers can create such economic ripples. They make better financial decisions for themselves as well as their families, increase their economic security and well-being, and they are in a position to obtain better jobs, create a desirable pool of labor of employers. Secure families are more involved in their communities as homeowners as well as voters. They are more involved as parents with their children's schools and teachers, enabling a better and educational and economic outcome for their own children. In fact, they contribute to vital, thriving communities, further fostering the community economic development. Thus, being financially literate is not only important to the individual household and family, it is also important for the communities and societies. Now, my question as to what is the meaning of financially educated person? Personal financial education may mean different things to different people. For some people, it is quite a broad area which encompasses an understanding of economics, how household decisions are affected by economic conditions, by the circumstances. For others, it is a very narrow focus on the basic money management. How do I budget? How do I save? How do I invest? How do I insure myself against future risk? Still, others, there are still a set of others which include a set of consumer buymanship skills, how to buy, what to buy within a financial education framework. In reality, financial education probably can and does all these kind of topics. The consistent theme, the thread that runs through the various definitions of these financial educations are to be knowledgeable and educated and informed on issues of managing money and assets, banking and investments, credit, insurance, and taxes. Next would be to understand the basic concept that underlie the management of money and of assets, which is the time value of money in investment, the pooling of the risk in insurance, etc. Now, also, using that knowledge and understanding to plan, implement, and evaluate your financial decisions. This definition implies that the outcome of financial education is includes behaviors such as paying bills on time, having manageable levels of credit, setting financial goals, and having a way of achieving these goals through saving and investing, spending wisely, and so on. The specific implementation of these behaviors may vary by income, by family, by circumstances, by asset level. However, for example, if we want all households to set financial goals, some people may have a goal of maybe having just 200 rupees in an emergency fund. For others, it may be 20,000. For others, it may be much more. These individual behaviors can and should be having the effect beyond the realm of an individual household. Less visible, but nonetheless important, are how these themes can be expanded to include community development. Having one financial house in order can lead to stability of housing and family life, which can contribute to a stable education situation for the children, more involvement of their family in their community. As I said, they would be involved everywhere. There is increasing evidence that financial education does make a difference in consumers' attitude and behavior. But most of these studies have also focused on household level behaviors. Credit has been reduced, savings have been increased, assets have been built up. But virtually none of these outcomes have been related to a financially literate neighborhood, community, or economic development. It may seem logical that these behaviors in the aggregate should lead to community development, but we really do not have enough data to validate these improvements. However, knowing and doing may be two different things. Financial education means increasing knowledge, combination of information, skill building, motivation, etc. There's a distinction that is required between information and education. And this is an important point for the policymakers and program leaders who make decisions about the allocation of resources. Financial education and awareness campaigns and learning tools, for example, website, brochures, which we have in IEPFA, are all important in their own right. But they also need to be coupled with audience targeted motivational strategies to elicit the desired behavioral changes in the financial management practices. It is also important for us to keep in mind that financial education is only one part of an economic development strategy. It can serve to complement other policies that enable financial access, provide for substantive protection in the financial market space, to offer mechanisms also for redress. It is necessary to note that financial education may also be required to be accompanied by advising through a general education, through financial education courses, through having outreach to each and every level of each and every strata of the society as well, so that the consumers or the customers can apply it and they again give it back to their families. So, logically speaking, a financially educated person makes a better decision, increases the economic security and the well being. Thereafter, financial markets around the world have become very accessible to the small investor as new products, new financial services are growing in a widespread manner. At the onset of the recent financial crisis that we had, the consumer credit and mortgage borrowing had burgeoned like anything. People who had credit cards or subprime mortgages were also in a historically unusual position of being able to decide how much they wanted to borrow. Alternative financial services such as payday loans, pawn shops, auto title loans, tax refund loans, rent to own shops had also become very widespread. At the same time, changes in the pension landscape are increasingly thrusting responsibility on us to save, to invest, and decumulate the wealth onto the workers and the retirees. In the past, in fact, the older workers happily relied on the social security, employer sponsored benefits, pension plans, retirement, etc. Today, in fact, by contrast, baby boomers have mainly defined contribution plans in individual retirement accounts during their working years. These trend towards the disintermediation is increasingly requiring people to decide on their own how much to save, where to invest, and during retirement, what kind of responsibility to be taken for the careful decumulation so that their asset, they should not outlive their asset so that they can meet their requirements. So where do we come into picture? Honestly, the rest of the knowledge will be given by our esteemed panelists, but where do we as IEPFA come in? So as I've been saying, the benefits of investor education are manifold. There are various agencies which are giving you investor education protection. We've got RBI, we've got SEBI, we've got NSE, we've got BSC. Various entities are giving. Where do we come into the picture? Now, India has got various, we have come under the Companies Act of 2013. IEPFA was established, that is Investor Education Protection Fund Authority, which is an authority was established under the Ministry of Corporate Affairs, which was to take care of all the funds pertaining to unclaimed shares, dividend, disgorged amount. And our job was, one, to refund the amount, refund the shares and dividend to the people who had forgotten to take their shares and dividends for the last 7 years, and they come back to us after 7 years and they can claim it back. So we do a set of verifications and then we give it back to the rightful owner. That is one part of our responsibility. The second mandate of ours is to give investor education, educate the investor not to fall for proxy for these Ponzi schemes, not to fall for fraudulent schemes. Be careful, investor. Be careful. Invest your money wisely. In fact, the Companies Act, the SEBI Act, the Security Contracts Regulation Act, the Depository Act, etc. All these are the pillars of investor protection. And IEPFA is a guardian for investor rights, advocate for financial literacy, and also promotes investor protection. The cornerstone of fostering a financially literate and a secure environment is at the heart of our effort. Now, what do we do in IEPFA? We have various schemes, various projects running. We partner with various organizations, which you will of course get as you scroll through about information about IEPFA. We've conducted about 70,000 IAPs, that is investor awareness programs, in various parts of the country, where one single resource person probably engages 400 to 500 people and gives them a lot of brochures and lot of literacy programs. Investor continuous education programs are also being taken up. In fact, a report which was made by ASSOCHAM has highlighted a significant improvement in the awareness and investor protection ever since IEPFA started their activities. IEPFA was established in 2016. So from 2016 to now onwards, there has been an increase of 10%. That is from 9% to 19% is the increase in the financial literacy. Now, I would also like to tell you that we have partnered with Indian Postal Payment Bank to have the Niveshak Didi initiative. Niveshak Didi is where a female Gram Dakia, she goes to the villages wearing the IPFA paraphernalia and she distributes the brochures. She tells the ladies of the village how they should save, what are the ways. She teaches them the basics about budgeting, about accounting, about opening a bank account, not keeping the money in a small almirah in the house or something like that. You can make your money earn for you. So this is what a lady Gramin Dak Sevak is able to teach through the Niveshak Didi. And this program of IPFA has been very well appreciated even by the Honorable Prime Minister. Then we have also partnered with the CSC to run Niveshak Sarthi, which are educative vans, which have got screens and internet connectivity. They go to the villages, assigned villages, they collect a set of people around them and they explain to them how things have to be done, how the same financial literacy is taken place. What do we plan to do in future? We plan to go to schools, colleges to make the young financially literate. We plan to go to RWAs to find the maids, cooks who make small earnings, to teach them how to save money. We propose to also hold a Niveshak Sansad in various cities. We propose to, Niveshak Sansad would be for basically the college students and the school-going children, where they would have parliaments, like they could have discussions and debates on financial literacy. So this is a kind of a mechanism for us to reach out to various people. So we at IEPFA adopted a 360-degree approach. That is, we attack through the social media, through meeting people, face-to-face interaction, going down to the villages, to the towns, to the countryside, meeting the fishermen, and various other things. So we also, and then we have utilized Twitter. We have our own IPFA app. On our website also, you'll find small, nice shorts, TV commercials about how IPFA is how you are to save money, or how you should not fall prey to fraudulent schemes, etc. But however, there are challenges. Surveys across the country have highlighted widespread lack of knowledge about the financial concept, underscoring the need for a comprehensive financial education program. Achieving this requires extensive collaboration between various entities and focus on the vulnerable group. Complexity in the financial products, in fact, requires that we simplify the rules, regulation. There should be more transparency. There should be effective enforcement mechanism. And all this needs to be supported through supervision and regulation. And I am proud to say that as a part of the Digital India effort, we are trying to bring about integrated portal, which was announced recently by the Honorable Finance Minister in her budget speech, wherein the the claimant will be able to get their claims, and he'll be able to see the status of his claim, so that there is transparency completely. And any person can probably enroll at some point in time as a resource person, or he can open up the website and see which are the schemes which are fraudulent, or maybe he can educate himself with the various educative material that we have. So financial fraud prevention is another area of prime concern to us. So we are looking at phishing scams, cyber security attacks, online gaming, and such other activities also. We'll be taking it up shortly. So to cut the long story short, the financial sector is extremely complex and fast changing. We need consistent investor education at every level. It is important for us to have focused and targeted attempt to spread investor education. And my esteemed panelist will take us forward from here, and initiatives taken by IEPFA in collaboration with other organizations are beacons of hope, illuminating the path towards a financially literate society. Trust and confidence is at the top of the issues of financial investor. So Warren Buffett apparently said that building a reputation takes 20 years, but it can be tarnished in just 5 minutes. In a world where trust is vital, it's our duty to strengthen our framework. Our aim is to preserve the hard-earned trust and renew it, so that investors have faith in our financial system. So let us stand as guardians of trust, champions of strength, and advocates of empowerment. Together, we will all face the challenges and remember the banyan tree, which is a symbol of unity and protection. We are crafting a future where trust is unshakable, where the investors thrive, and India's economy flourishes. We are invited to tackle challenges hindering investor protection in India. This is our chance to pool our wisdom, learn from each other, and create a financial landscape where all the investors succeed. I want to emphasize once more the importance of our mission. We are not only securing investors' future, but also propelling India's economic growth to greater heights. Thank you for your attention, and let us continue to strive for a world where financial literacy empowers individuals and strengthens our economic foundation. Thank you very much.
Thank you, madam, for this enlightening thoughts that you have, and also you have beautifully detailed out the IEPFA efforts, which each participants will now go back and keep thinking in terms of how they can really multiply and synergize their efforts into the efforts of IEPFA. And fully appreciate the view that financial education per se is not enough. We need to convert it into financially sound decisions, and also a systemic framework that needs to be there to support the investors for ensuring investor protection. Thank you, ma'am. And request you to be there till the question answer session in case anybody has any specific questions. May I now request our first speaker, Mr. Dhirendra Kumar. And Dhirendra Kumar is the founder and CEO of Value Research, India's leading independent personal finance and investments information and research provider. For last 30 years, he has been closely observing the growth of the mutual fund industry by interacting with and helping thousands of investors directly. He will have a perspective from the investors proper. He is the editor of Value Research popular website and its 2 monthly magazines, Mutual Fund Insight and Wealth Insight. He is in advisory committees of SEBI and PFRDA, the popular columnist and commentator in the print and electronic media, the graduate from business studies from University of Delhi, and he has founded this Value Research organization, which most of us are familiar with. Dhirendra, would you take off and take 7 minutes or so for your initial?
Sure. Sure. 7 minutes. Okay. I'll start with my stopwatch. Thank you for this opportunity, and I'll try and be brief as possible and use that time for answering questions.
Yes.
I've been answering investors' questions, and that is how I make a living. And I've been doing it for 30 years. I founded Value Research soon after graduation. So it is undoubtedly true that it's not possible to protect investors who don't have the knowledge and the willingness to be protected. This means that, most people need to be basic, most people need basic financial literacy. And it's generally assumed that this literacy takes the form of knowing what to do with money. What Madam Anita Shah was saying, that, people should know, and there are initiatives and people are being taught, and they need to be, there are different fronts in terms of helping people, the basics of, budgeting, personal finances, also getting a sense of how things work. But, and financial literacy, generally involves teaching how the investment world works and what are the different types of investments and who are they useful for, how to fit them into your financial needs, so on and so forth. So that is all good stuff, investor must learn it. But it's not where people go seriously wrong. That is not where people go seriously wrong. People go wrong where they go wrong is when someone tries to hawk some bad financial product or an inappropriate one, dressed up as good ones. And the whole regulatory framework is centered around that, the mis-selling, the inappropriateness, somebody being sold something which he doesn't need. And every product is so much dependent on finding the suitable person. You can have a great product and it could be sold to an inappropriate person. He may not be a right person. So, and if you are in the market for financial product, then sooner or later, somebody does exactly that. This is not an exception, but 100% rule. Everyone is subject to being sold either harmful or an inappropriate financial product, and that is the beginning of his investment journey. So it would be far more useful for people to learn what not to do with their money. In fact, it's a very negative way of looking at it. More important than what they should be doing. The focus of the education should be what exactly, the set of things they should not be doing. Because this kind of financial literacy is generally not available anywhere. In fact, it has to be learned only by bitter experience, which is not a very desirable way of learning. So one of the problems in delivering this realistic financial literacy at scale, that many harmful financial products are, they are absolutely legal and extensively regulated. For example, I've always firmly believed that, Mr. Nair might be smiling at me based on what I've been writing all these years. Completely, many financial products are legal and extensively regulated. For example, I've always firmly believed that except for term insurance and annuity, every type of product sold by insurance company, both LIC and private insurers, is something which is only the degree might vary, but it is a swindle. And it is a legitimate one. There is nothing illegal about it. They are regulated, they are approved, and they cannot be a best combination for the investor. So similarly, and that's not the only thing. Similarly, the entire business of trading equity derivatives is a swindle, and a legal and a tightly regulated one. In fact, SEBI came out with a study just about 8-9 months back, and it is a very formal description. It's all documented that 89% of individual traders, which means 9 out of 10 individual traders in equity futures and options segment, incurred losses, with an average loss of 1.1 lakh in the financial year 22-23. So, this is very fresh data, and it is based on all kind of analysis which SEBI has access to. So that is quite an eye-opener. So at the heart of all this is, simple truth that every single entity in the financial system is a slave of its incentives. It is not effective to have a system where we create incentives for people and organizations which are misaligned with that of their customers, and then try to educate the customers to guard against the ill effects of this misalignment. This is a very undesirable way of, which means something else needs to be done. This stage of the process could indeed be improved by, utilizing artificial intelligence and modern tools, acting on the digital data trail, because, today, most of the transaction, in fact, SEBI was able to come out with this study. It was not possible to do it in the 90s when somebody was taking orders, or, the stock exchange was run on the Badla system. But today it is possible to actually dig out all the data, make sense of it, and come out with this conclusion that, okay, 89% of the F&O traders don't make money, and they lose on an average 1.1 lakh rupees in a year. So this data trail that modern financial system produces could be a huge advantage, can actually preempt many of the bad taste left by inappropriate, unsuitable financial selling behavior. Essentially, we have patterns of behavior that may indicate some form of misalignment that someone is trying to exploit. And this is certainly something that is worth exploring systematically. This could be the new realm for the regulators, because, life insurance companies, they have been mandated to provide a free lookup period every time insurance, that is trying to preempt a person. But unfortunately, the behavioral part of it is that most people put their policy document in the closed envelope in their locker, and they are surprised only after they open it after many, many years. So at its heart, we have a problem of human choice and incentives. We could have a method of financial education where the first step that everyone is taught to carry out is to think about other person's incentives. What is in it for me? That comes second. What is in it for you? Asking that question actually should be a great starting point. So when someone comes to me to sell a financial product, I don't think about what the product will do for me, but what will it do for the salesman? And that is what I call an attitude of, default distrust. Because going by the scale of disenchantment, inappropriateness, unsuitability, or things being sold to people which they don't need, and they are perfectly legal, they are perfectly legitimate. They are not the finest product. They are not done in the best interest of the investor. So that could be a good thing for the individual investor, a starting point, because that will end up questioning, demanding, and that might also change the behavior. And today it is possible because, the world has changed completely with a smartphone, with your ability to look for things, look for facts, asking questions, because you have to ask questions. And the way individuals are empowered today, I think everybody spends so much more time looking for the right technology for a phone or smartphone or for a washing machine. They don't spend as much time on the financial product or asking the basic question, that 7 dimensions on which one should evaluate any investment or savings vehicle: liquidity, return, risk, tax efficiency and things like that, So, it could be very parametric and one can ask for very specific things. So it sounds like a very negative attitude to have it, but, unfortunately it is needed and it should be taught and encouraged. So that's all I have to say in these 7 minutes. Dr. Mahapatra, I hope I have complied with your timeline, and I'll be very happy to take any question that comes my way.
Thank you very much. I actually kept some time saved for you. We already have a question relevant to you. Only when we'll start the question answer session. So and now may I request Mr. R.K. Nair to have his intervention. Mr. Nair has around 40 years of experience in the banking industry and in the field of securities and insurance regulation. He is a former member of the IRDA in charge of finance and investment. He was a nominee of the on the International Association of Insurance Advisors subcommittees on accounting, auditing, governance, supervision, maintaining insurance standards, financial stability. He also served as ED at SEBI and as the MD of Corporation Bank Securities Limited. He was the nominee of the National Advisory Committee on Accounting Standards and the IRDA nominee on the RBI Technical Committee on Money, Government Securities and Foreign Exchange Markets. Holds degree in science, securities law, management and law. So heavy amount of experience in the securities market, insurance market, and also he has been involved in the pensions market also, being one of the members in the NPS, which I know. So maybe he can give you an institutional framework of investor protection amongst regulators and his own views. Again, almost around 7 to 8 minutes, and we'll leave something for some time for question answers. And I think it's appropriate for me at this juncture to mention that the views are personal to the speakers, and that's the disclaimer I wanted to mention immediately after Dhirendra's intervention and R.K. Nair's beginning his intervention. Mr. Nair, please.
Yeah, no, thank you, Mr. Mahapatra, for this invite to this galaxy of, great speakers. I think Anita and Dhirendra has set the tone for this meeting. And I will give you a broad, I couldn't agree more with Dhirendra when he says that financial products have to be sold in a very responsible manner and disclosures have to be made. And there are challenges in the way the regulations are being made and the way digitization is, posing more and more challenges to the investor protection. Now, I happen to sit on the board of ICICI Bank, and there I'm looking at banking very closely and the manner in which the developments are happening in both the liabilities and the digital lending side and the digital liability side. And here we are, facing challenges because the retail banking is becoming a big part of banking, and a large number of loans are being disbursed by models now. And therefore, predatory pricing, understanding interest rate, repayment terms, RBI is doing a lot of work there. Collection mechanism of name and shame by getting contact list, consent seeking done very surreptitiously. Also, the role of digital platforms in data sharing, no instant grievance redressal mechanism, and even escalation. Then on the liability side also, there are a lot of challenges like the issue of mule accounts. People are willing to sell their data such as Aadhaar and PAN for a price. How do we ensure identity in the digital world? Hence, investments being done in this area by bank and other regulatory bodies to counter this. The points to ponder here are how much data analysis and personalization of customer friendly and is customer friendly, and where does one draw the line? And if customer is ignorantly giving away all information to fraudsters willingly, how does one protect customer interest? Now, this is on the banking side, and I happen to chair the fraud monitoring committee where we come across these digital frauds in a big way. And I must say the RBI has been taking a number of measures to contain the frauds or to and what I'll give you some of the interventions which are being done by the bank. We undertake screening of documents submitted by customers with application forms. The team uses a Hunter. It's a database consisting of negative attributes contributed by 115 member banks and NBFC for washing certain data points. So that's one way we try to preempt the fraud. Based on the dispute trends observed by the real-time decline rules are implemented using permutation combination of certain data points, that is velocity, amount, threshold, merchant category code, transaction type on an ongoing basis. Real-time auto calling systems are being devised wherein an automated IVR call is initiated to the customer's registered mobile and a trigger is alert is being made. Negative data such as negative device IDs, suspected mule beneficiary accounts, wishing phone numbers, untrusted IPs, negative VPA identified, and updated iSafe Falcon transactions monitoring systems on a regular basis. Location coordinates such as latitude and longitude for establishing photos that are verified with coordinates of customer communication for current accounts. Email verification has been made mandatory for salary, wealth, savings account, and additional checks for employee provident funds and GST records. Now, these are some of the fraud prevention measures and customer protection measures being taken to prevent the kind of digital frauds which are happening. Now, training initiatives, we have undertaken. The website is updated with a Beware program and a modus operandi of financial fraudster booklets and general safety tips published by RBI is available for the banking customers to see. Safe banking videos like Beat the Cheat with the leading star actress Tabu was launched. A report on financial fraud option was introduced in other services option along with crime prevention help on WhatsApp and InstaBiz application, and various safety tips are being sent on iMobile applications, Twitter, SMS, physical statements, and so on. So this is what I can say is happening on the banking side from my personal experience as an independent director. As far as the insurance sector is concerned, I would concur with some of what Mr. Dhirendra Kumar says, that there is a need to have more transparency in the products itself. And in fact, a lot of reforms have happened in IRDA over a period of time. In fact, some of the products which were pre-2010 and post-2010, a lot of change has come. Premium multiples, if you pay 10 rupees, you get at least 100 rupees of insurance. And that is the minimum amount of even in a non-term insurance product that has been done to protect the investors or the policy holders. But here I will come to the, again, the intermediaries which are selling these insurance products play a very big role. And I believe that the channels through which they are sold and the trust which the customers have on those channels play a very vital role in selling some of the products. And I don't disagree with him when he says that, term insurance and annuity products are very, very appropriate products, and they need to be encouraged in a big way. And that is what, we are doing at the ICICI Bank. There's no target being given to the front office staff to sell other products. The target is only on these two products, the term insurance, health insurance, and annuity. And of course, the general insurance products. So, some of the challenges which I got from the IRDA, I spoke to my old colleagues there, and some of the challenges they face is the digital divide. Between the tech savvy and those who do not have any clue on how to, operate the, the modern technology tools, and therefore there is a need to have a hybrid model and an assisted model, especially for senior citizens who fall prey to a lot of this mis-selling. And the companies are also, second point is that companies are investing more in technology and digitization to keep expenses under check. But no matter how much digitalization happens, a human touch remains. And transparency, audit trail, contactability, these are some of the important positive outcomes that will empower the customer. Reaching out to a large number of people at one go is one of the positive impacts of digitization in insurance. But with specific the challenges of the, you asked me to speak on the challenges faced by the regulator. And here we find that a lot of insurtech companies have come in, and a lot of customized products are being offered in the market. And the earlier the insurance was a pooling of resources, and then if there is a claim or a loss, one customer was being benefited at the expense of a large number of other people who used to pool the accounts through the insurance channel. Now that is slowly changing. We are seeing customized insurance products being sold, short-term insurance products, life insurance also being sold on a short-term basis. So some of the challenges I gather from the IRDA are that the regulator itself needs to understand some of the modern methods by which companies are making these products and how to monitor them and how to supervise them. And I believe that they are doing a lot of work. They are starting what is called the Bima Sugam, and a lot of technology interventions are happening through the regulatory offices, and creating more and more facility for and also learning by the regulator itself. Now, coming to the pension part, you are right. I was part of the NPS as a trustee for a few years, for the last 5 years. I just retired recently. And some of the challenges the National Pension Scheme design subscribers are, fairly literate. But, since it operates on an open architecture, subscribers are required to make a number of choices, like the choice of the PFM, that is the pension fund manager, the choice of the type of asset class, the choice of the asset allocation strategy, the post-accumulation options. And because of these, in fact, people are literate, but not very financially literate, and they find it very difficult to make these appropriate choices. And the digitization challenges faced by the pension are, subscribers are not digitally literate, especially those who come under the Atal Pension Yojana scheme. The digital journey is not standardized across CRAs, that is the POPs and other points of presence and so on. Multiple options for online KYC, digital payments, etc. confuse customers. And finally, online grievance redressal processes are cumbersome. Now, I will stop at that. I think I've taken more than my time, and I will be prepared to answer questions on these three areas after this.
Thank you, Mr. Nair, very much. You have had to cover a lot of ground to enlighten on the regulatory sphere. People must be patient to hear the most important sector, that's the banking sector. Yeah. We have the Reserve Bank of India, ED, Mr. Neeraj Nigam. He is in charge of Financial Inclusion and Development Department, which is the most relevant thing for this purpose. Also, he handles Customer Education and Protection Department. He had handled Legal Department, and over a span of more than 3 decades has served in several areas on regulation, supervision, human resource management of Reserve Bank of India. He holds a bachelor degree in civil engineering and is a certified associate of the Indian Institute of Banking and Finance. May I now request Neeraj to give your intervention. And at this juncture, let me also announce that the really most interesting and the modern topic which will come after the intervention of Neeraj is the internet governance, data protection, and cyber security, as well as the digitalization efforts that is going on. That will be our last speaker. Now, may we start with Mr. Neeraj Nigam, please.
Thank you, Dr. Mahapatra, for having me in this webinar here. And good evening to all the participants. In fact, Dr. Mahapatra, you have made my job quite easy in the sense that Mr. Nair has already covered quite a bit about the developments in the banking area, and Mr. Verma would be covering, being an expert in the digital area, he would be covering most of the things on digital challenges. Nevertheless, banking, as you said, being something very important element of the financial sector, let me talk a little bit about the customer protection part. I'll leave financial inclusion given the time constraint here. And I'll take it forward from where Mr. Nair, he really covered in great detail as to what ICICI is doing and what are the challenges that the banks are facing. So let me start with a little bit of theory. So what happened that RBI released the Charter of Customer Rights. Now this charter contained 5 basic rights for the customers, which are right to fair treatment, right to transparency, which Mr. Dhiren talked about, right to suitability of the product, again, on which Mr. Dhiren elaborated quite a bit and Mr. Nair also repeated, right to privacy of the customer, and lastly, right to grievance redress and compensation. So based on these 5 rights of the customers, now I come to the straight away, I come to the implementation part given the time constraint. So when we talk of implementation, we thought that there are 4 important pillars on which the implementation of the customer protection framework has to be built. So one is sound regulatory guidelines should be in place. Now, I mean, as you are aware, RBI is basically regulating the banks, the NBFCs, the payment system participants, the credit information companies, and so on and so forth. And both assets and liability side are involved. So regulatory instructions necessarily have to cover the entire aspect of functioning of these 4 types of regulated entities. And more or less, if we look at it, most of the regulations somewhere or other have an impact on the customers as well. Even if they are the prudential regulations talking about the requirement of capital, somewhere or other they impact the cost, and then that is how the ultimate consumer gets affected. So after regulatory instructions, then there has to be a continuous and intense supervisory assessment of the regulated entities as to whether they are following the regulatory instructions issued in letter and in spirit. Thirdly, there has to be a very robust customer grievance redressal system. And lastly, as the Chief Executive Officer in her initial address focused on the financial, and you may call it literacy, you may call it education, you may call it awareness, depending on which class the customer belongs to. So for example, for us in Reserve Bank, when we try to bring such a large number of excluded people to the fold of the banking, for us probably the financial literacy becomes most important. But at the same time, we do acknowledge that financial literacy is not enough. Financially literate people, as Mr. Dhirendra was alluding to, they're not so aware so far as suitability of the financial product is concerned, the possibilities of occurrence of frauds is concerned, and so on and so forth. So even the financial awareness aspects have to be all inclusive. So now let me focus a little on, given again the time constraint, on the customer grievance redressal system that has been put in place by the Reserve Bank for the regulated entities. Now, under this system, we cover 4 types of entities: the banks, the NBFCs, the payment system participants, and the credit information companies. Now, what we have done is that we have mandated all the regulated entities to have a system of their own, which is called internal grievance redressal system, that comprises of a mechanism of having a internal ombudsman in these regulated entities, which is the internal ombudsman has to be supported by their own staff, and so each regulated entity is supposed to have a network of nodal officers, starting from branch leading up to the principal nodal officer at the head office, and they come at the internal grievance redressal system. Now, after that, we have an alternate grievance redressal system, where basically those complaints are handled where the resolution is not given by the internal grievance redressal system. Now, here the integrated ombudsman scheme comes into play. So what we have in place now is 24 offices of ombudsman. What was earlier called banking ombudsman now has been, so banking ombudsman basically was only for banks. Now having included the NBFCs, the payment system participants and the credit information companies, now this is scheme is called RBI Integrated Ombudsman. And as I told, it's basically one common scheme operating throughout the country, administered through offices of 24 ombudsmen across the length and breadth of the country. So again, I mean, given the time constraint, it may not be possible to get into detail. And if there are any questions on that, I'll be happy to address them. Now, presently, the ombudsman scheme is working well, both at the level of the regulated entities as well as at the level of RBI. However, and that's a very big however, given that the awareness of the people, awareness of the customers is increasing, there is a marked increase in number of, and also the impact of the awareness campaigns that Reserve Bank undertakes in collaboration with the regulated entities, and banks do cooperate us quite a lot in spreading awareness. The number of complaints is increasing day by day. We have to increasingly rely on technology, but at the same time, it is not an easy task. So the biggest challenge that we are facing is not only at RBI, but when we look at the entire landscape at the level of the regulated entities, at the level of course, at the level of RBI, which indicates that the implementation of the regulatory guidelines in the first place is faulty. And we have been requesting the regulated entities to have a closer look into this, have intervention of their board, and there are customer grievance redressal committees of the board. Mr. Nair is aware of that. And so that is the first challenge that we are facing. And as we have been talking earlier, the second challenge, which is probably the biggest challenge going forward, will be that of digitization of the financial services. So now here, the problem we all know, the regulator faces not only the challenge of resolving the customer complaints, but also having a balance between the innovation and the customer protection. Because when you have very tight policies on customer protection, obviously innovation is going to suffer a bit. Recently we had come out with the guidelines on digital lending, which was really required. But at the same time, there are obvious concerns that it may stifle somehow or other the innovation on that front. And the second challenge there is the compliance cost. So even the large banks are finding it difficult to meet the cost, but I mean, not to talk about the smaller entities. So these are some of the challenges which are going to be there. And we need to increasingly rely on technology, possibly to, I mean, that's again a kind of dichotomy that challenges coming out of technology to be met from the technology. So we will see as we go along what can be done best about it. And I think even I have taken a little more time than what was allotted. So thank you very much. I stop here. Happy to take questions.
Thank you, Neeraj. There is quite a bit, at least on the banking sector, which none of us covered so far. The most important topic and most modern topic, which people are waiting to hear, is from Gangesh Verma, who has been working in Saraf and Partners since 2021. He has over a decade of experience in technology policy and stakeholder engagement for regulatory policy. He is also a consultant on digital economy, startups and innovation teams, worked very closely with the government in their engagement with the Internet Corporation for assigned names and numbers. He was also associated with a law school's course on Internet governance. He has served as a senior fellow in the Center for Communication Governance in the National Law University, Delhi, provided legislative research assistance. He is a graduate from University Law College, Bangalore, and has an MPhil in International Legal Studies from Center for International Legal Studies at JNU, New Delhi, which is my alma mater for my PhD. So, Gangesh, would you kick off your intervention? little quickly, and we have a little bit of time for question answer. So,
Certainly. I'm going to keep it very pointed, and I'll keep it within 5 minutes, if that's okay.
7 minutes is okay with me.
Oh, okay, great. So first, I'd like to thank everybody, especially the previous speakers and Dr. Mahapatra. I thank the organization for inviting me to this panel because, more than anything, I've learned so much from the past few speakers, and I've taken vigorous notes. So it's not only a hard act to follow, but it also has informed me in so many ways. Now, I'd like to start with understanding very broadly the implication of technology adoption, right? At a very fundamental level, technology adoption will have dual effects. There will be, great benefits and sort of good things that come out of the adoption. And there will be the ill effects or the bad side of the adoption, right? And let's look at it from the three different stakeholders we just discussed. One, the investor, the simple person who is putting their money into an instrument. The other is the businesses that develop these instruments and try and sell and cater to this sort of industry. And third is the regulator who's dealing with both these other stakeholders and trying to create an ecosystem that nurtures that business and protects the consumers, right? So if we are to simply look at the impact that we are looking at for investors or consumers, we're looking at an explosion of access, right? The ability to purchase and interact and interact with these instruments and modify, purchase, sell, all of these things become a lot easier with the advantage of technology. But rightfully noted by some of the previous speakers is the digital divide. So that same technology that allowed access is, keeping access away and blocking it for other set of consumers. Similarly, if we are to look at how technology is being used to people who already have access, if we are looking at the deployment of artificial intelligence and other machine learning tools in terms of, identifying customer target pools and all of that, the ability to reach out to more customers and real target audience has improved, but it also inadvertently can risk excluding certain customers because there's an algorithmic bias or the code, there was an exclusion because of the data sets are not clean enough to provide an inclusive market. So similarly, if we are to look at the security of the threat angle, a lot of people discussed about scams and criminal activity and all of that, right? The adoption of technology there is useful in terms of, like Mr. Nigam discussed about the use of technology in financial fraud, discussed. Dr. Nair also discussed about it. We're talking about fraud detection and using technology, AI and machine learning to improve our ability to understand financial behavior and financial crimes and all of that. But there is also the same criminal actor is using technology to deceive investors, to pretend like a legitimate actor and siphon money from an investor. All of these effects are also happening. Right now, going to the regulator's impact. Again, the regulator also is utilizing technology in terms of trying to solve these challenges that come across. The and digitization of compliance processes have made it much easier for ease of doing business, and that has sort of also allowed for the growth of the sector and create more financial inclusion. I think without doubt, everybody here would agree that the adoption of technology has improved financial inclusion. But all of us, in the same breath, talk about the difficulties that come with the greater adoption of technology, right? Because there are new products that have been introduced which people don't understand. Even in terms of, even if we don't even touch the area of suitability, to be able to understand what you're investing in is a very big, important aspect. And I think I agree with a lot of the other speakers who said transparency as a basic requirement should cut across all sort of regulation. Now, with the advent of new products or new market access and all of that, there will be new laws that need to come in, right? And for example, we're looking at, I think one of the greatest examples in terms of technology ambiguity and gray areas is the crypto regulatory space. The lack of regulation in that space has sort of lack of clarity has sort of enabled a lot of it, right? Challenges and issues. Now, the first question a lot of people would ask is it enough that there are laws and the regulations? Clearly not, and that is also why organizations like IEPFA exist to educate, to inform, and the education here. I think we've covered both aspects, right? There is about financial literacy and also this digital literacy, and I believe that technology can be used to forward the educational agenda as well. In terms of outreach, we can look at trying to, take a more of a whole of a government and whole of society approach. We don't have to be isolated to the organizations that are mandated to do these functions. We can reach out to, NGOs, volunteers, companies, mandate that there are CSR responsibilities in terms of education, financial and digital literacy, right? And I just want to also address very briefly the question of innovation suffering at the heart of strong regulation. I think it's not, I mean, every regulation will create a certain compliance cost and it will create a certain sort of entry barrier to a large extent. But that doesn't mean we can do away with regulation. I agree with that. What I think will be better with the advent of new regulation is to bring a sense of predictability. And if we can bring that sense of predictability is through creating consultative mechanisms. And we can see that happen with many regulators, and that has happened. We can see that in the space that we're still discussing, right? So creating that consultative mechanism and creation of those rules would really solve for that. So I'll wrap up. I think I'm on the dot for 7, and I'll take any questions.
Thank you very much, Gangesh. All this discussion shows that we need many more such webinars to cover topics like this. So maybe a dedicated one for digitalization and artificial intelligence and its role in investor protection area. The other one can be in terms of the building of the institutional mechanism and making it even more robust. And with this, what I consider that we have been able to cover the entire gamut, starting from the micro concerns with the CEO mentioned to the macro concerns of every regulatory sphere, and of course the investor grievances part of it covered in the beginning, which is the real meat of investor protection, that people should be secure. To my mind, if I have to summarize what we all discussed and what I call it as SEBI RBI principle of investor protection, it's not about SEBI or RBI. It's an acronym I think is appropriate. We should have a secure system, enabled system. People should be beware of all the frauds that is being committed and the mis-selling that happens. People should be informed. That makes the SEBI part of it. And we can make the system secure by effective regulation and supervision. We talked about effective grievance redressal system. And here I would mention that one thing which we missed out is that the Financial Sector Legislative Reform Commission around 2012-13, I had the opportunity of examining the recommendations, has recommended a uniform financial redressal agency, which is still under the consideration of the government. Once it sees the light of the day, maybe the grievance redressal can be more swift, more effective, and more uniform. Regarding being enabled, we should promote financial education, and we should make products available on the other side also to enable the investors to invest and remain protected and to remain beware. It is a two-way process, I always call. Protection is not at all one way. Investor has to protect themselves through financial education, through taking the right decisions, what is suitable for them, as well as government and regulators on the other side has to ensure a mechanism of grievance redressal and supplying innovative products catching the people who are mis-selling, as also the companies who are not doing the due amount of transparency and disclosure. And the informed investor is always an educated investor. And the RBI principle is about research and surveillance, which none of us mentioned. Research and development and doing effective surveys. We have seen the index. I cannot get into the details of the figures that has come about. There are concern areas. There are areas of highlighting, and we will have to have a strong research, and IEPFA has a chair here at NCAER, under which we are holding this webinar. Is their contribution to the research. And under B, we'll have to build trust and confidence, which has been highlighted by all the speakers. And under I would consider innovation. Innovation of simple products, innovation of simple processes, the processes of grievance litigation, the processes of claiming the unclaimed shares and dividends, as the initiative has been taken by Honorable Finance Minister to set up an integrated portal, and the entire process of regulatory governance has to become simple and accessible to investors, not only in the urban elites, but also semi-urban as well as rural areas. And after all, we should have effective systemic checks and balances, as well as concurrent monitoring and evaluation efforts, apart from continuing our good work, which all the regulators and agencies are doing in a more synergized manner, in a more effective manner. That's my take on this topic for the time being. Thank you all very much. We have 4 minutes left for question answers, and I have in the list one question from Mr. Amit Anand, who asks about investor educators say ULIPs-like products are not good for investment. Why doesn't government ban them? That's the question. So maybe Mr. Nair and then Mr. Dhirendra can answer this question. Mr. Nair, do you have anything to say? Why? Yeah.
So I would not I would not agree that it's a bad product. See, there are charges, and over a period of 10 to 12 years time, it's a long-term product, and it gives a lot of financial security, particularly to the family in case of any distress. And if you have people who have made a lot of wealth through the unit-linked schemes also. So it's not that the mutual fund industry doesn't charge for your equity investments. There's a expense ratio which is not very well known in the market in the equity investment scheme, just as a fund management fee is being charged by the insurance industry. So there are users of the product. There are a lot of high net worth individuals who buy the product willingly, and I think there were tax benefits earlier, which has been removed now. So that kind of tax arbitrage which existed has gone from the ULIP products, and therefore it's gone from the insurance product itself. Over 5 lakhs of premium, I think, is getting taxed now. And for ULIP, it was 2.5 lakhs. So there were people who were exploiting this arbitrage in the past. I think now you will have cleaner products, and I have seen a lot of people being actually benefited by when they bought these products. So it is not fair to say that the product, it was not very good at one point of time, say pre-2010. After that, a lot of reforms have happened, and the cleanup has been done in the product. The insurance bit comes into play when some event happens, and at that point of time you realize that it is a savior for the family when you get a lot of protection at that point of time. So therefore it's all based on your needs and your in which tax structure you belong, but I do tend to believe that it should not be missold. Selling it to a certain through an agent probably is fine, because the agent has the time to explain the product and understand the need of the customer. Selling it through a broker is also not a bad idea, but selling it to some other channels where you have a dominant, you understand how much money is in the customer's account, and then you try to push that product. That could be a problem.
Yeah. Dhirendra, would you like to supplement in a minute? Anything you want?
Yes, I agree with Mr. Nair that, ULIP has improved quite a lot in the last 10, 15 years. IRDA has gone about making changes which has made it more transparent, more aligned. Earlier, ULIPs used to confiscate the money if you discontinued somehow in the first 3 years. So it has improved quite a bit, but still, I would say that for an informed investor, for an evolved investor, mixing insurance and investment is not a good idea, because insurance is a very highly variable need. When I was a bachelor, I needed nothing. The moment I got married and I had a financially dependent wife, I needed a large insurance. Then I had a kid and I needed an even larger one. Then I bought a house, and then I need an even bigger one. And then I went about saving and investing, and with my accumulation, gradually I needed nothing, because my net worth was good enough to just in case I disappeared one day. So in that sense, because the insurance needs are huge, and more so in a country like India, where everybody will come. Transparency. If we are able to dissect everything into 5-6 things, how much return, how much cost, how much risk, if we are able to simplify the communication, I think that will be a significant thing, if not banning something.
Thank you, Dhiren. So it's a real highly illuminating interventions by all of you, including our
You've not heard Sumit Agarwal there, no? Who's Sumit?
Yeah, but I leave the last word, as I mentioned, to Sumit. We have 3 minutes left for Sumit to give the formal vote of thanks. Sumit, please.
First of all, I must say that the session was quite awakening for me as well, being the one who is taking care of awareness with IPFA, financial awareness part. So it's a good thing, and we can definitely have more webinars on this, because this is not sufficient for everybody who is attending the webinar right now. They would like to know more about it, and they would definitely have many questions to ask. But again, come back to the point, I must not take much time. Warm evening to all the participants in this webinar on Investor Protection Framework in India, Challenges and Road Ahead. The webinar, jointly organized by IPFA and our research chair at NCAER under the aegis of Ministry of Corporate Affairs, Government of India. We are honored by the presence of our esteemed experts, thought leaders and stakeholders dedicated to the vital cause of investor protection and financial education. I extend my sincere gratitude to Dr. C.S. Mohapatra first, IEPF Research Chair at NCAER, for his gracious presence and insightful welcome address. A special thanks to our CEO, ma'am, for sparing time for this webinar and delivering an enlightening keynote address. Ma'am, your leadership steadily guides IPFA in supporting investor confidence. The panel discussion was really enlightening, with the great panelists bringing vast experience and views to the discourse. My sincere appreciation and thanks from IPFA to Mr. R.K. Nair first, Mr. Dhirendra Kumar, Mr. Neeraj Nigam, Mr. Gangesh Verma, and for sure, Dr. C.S. Mohapatra for their gracious contribution. This webinar is an evidence to our collective commitment to fostering a secure and informed investment environment for every citizen of this country. And before concluding this enriching session, I would urge all to pledge with IPFA, because this is the mandate for the authority, to continue our efforts in securing investor interests and promoting financial literacy for everyone throughout the country. Thank you. This is all from my side. Thank you so much. Over to you, sir.
Thank you very much. We had exactly that much of time, and I'm really grateful to people who attended. I must mention here, many questions were asked, which were so graciously answered by my fellow panelists. Thank you very much. Only one question, that ULIP question, was left for discussion. So thank you all very much, and goodbye. And I am assuring IEPFA and the audience and everybody that in future we'll have a series of seminars and workshops that suits the need of the hour, and that is needed by the investor, because it is their protection which we are guaranteeing. Thank you so very much.
Dr. Mahapatra, just to add to what you were saying on the new regulations and also what Sumit was saying in terms of promoting investor interest, I think there's also the apt opportunity to discuss the impact of the data protection bill. Maybe that can be another sort of option for discussion
We
in the
will
future.
discuss it over.
Definitely.
Now our time is up for the timing. Thank you all very much. And we
Thank
can
you.
all leave the meeting. Thanks, participants. Thanks, panelists.
Thank you.
And thanks, Sumit. And
you.
more thanks to the CEO.
Thank you so much.
Thanks.
Thank you, Dr. Mahapatra. Thank you very much.
Thank you
Thank
very
you.
much.
Thank you very
Thank
much.
you.
Namaskar.
Thank you.
Being